Thank you very much for the introduction, and thank you for joining me, Rolf. And thank you, everyone, for listening to our fireside chat this afternoon. And I'm just going to put down the water, do my job. How are you today? Enjoying the conference?
Yeah, very good, very good. So I arrived quite early in the morning, had a red-eye fly over, and we'll go back actually tonight. So it's a quite intense day. So I had quite a lot of interviews, and we'll go back tonight.
All right, so I'll make it less intense for you with this 30-minute chat about your experience of going public. So you went public late last year. Congratulations. And investors seem to be liking this stock. It's up 80% year to date. What do you think investors are liking about your company and your stock?
Yeah, I think we had quite a slow start actually. So when we started, I think there was we were quite new to the market. So I think people really did not know us pretty well. And they were also not knowing what to expect from us. So maybe when you are in a US company, you have several private financing rounds before. They get more accustomed to the company. They know the numbers better. They know the profile better. And I think they didn't know so much about trivago. And so I think it was okay. We did only we floated only a very small share of the company. For us, it was important to get the process done, to be fast to the market, to be fast back in the business. We wanted to close at the end of last year to be able to care for the operations again from the beginning of the year. So that worked pretty well. And at the end, it's about where the stock price is after a year, after 2 years, after 3 years, not where it is right after the IPO.
It was certainly a good chance for the market, I think, to value trivago as a standalone, separate company. But we'll get to more about IPO later on in this chat. But let's do a setup on trivago and what the company is all about. And it's a little bit about future growth. Is it a challenge for you to stick to that model? Because it's a little unique, sectioned off player in this market, because you don't necessarily plan to expand in multiple verticals, as you've talked about recently in many interviews, but you are not allowing users to make a booking on your platform. Is it a challenge at times?
I think it's a challenge when you, especially when I see that you have lots of financing around in the later stages of the company, which we never had. So trivago is just built solely with 1.4 million euro in external capital. So since 2007, there was no capital inflow into the company, although it has now a valuation of, I don't know, like 7.5 or plus billion. And so I think that's quite a unique story. So if you don't have that, if you can't do that, if you taking more money later in the later stage of the company, let's say for example like Airbnb right now, yeah, I think you get a little bit of pressure to diversify, right? So because you're getting money, people say, hey, you can do very well, so we give you more money, you can do other things very well. I think that's not so easy. So I think it's a lot about the identity of a company. So and I think like building a company for me is a little bit like a finding process. You have to find yourself. In the different stages of the company, you have to find what you're good at, what you can do well, what you cannot do so well, and you have to find your identity. And if you're getting too much money to do other things, you're rather diluting your identity. And I see at least the risk that you are diluting your identity. And so no, it's not that hard actually. So I think that this is one of the things that really made us successful, to really focus. And we always said yes, we can imagine to do something else, but we have to solve the problem first. And I think we are not even halfway there to solve the problem. So I think for the next 5 to 10 years, there is nothing more to expect from us than getting people into their ideal hotel.
So as you continue finding yourself, will we at some point find trivago going into other multiple verticals?
So I think the current process that we had was a process of more and more focusing and really finding out what's the problem and solving that. And that is, it was a process throughout the history of trivago. I mean, there were some step changes where we were like going like faster into that direction or slower. But basically, when you see trivago, we were more and more focusing. And I think that's necessary because I think that we are moving more and more towards a world of perfect information. And if you have a world of perfect information, there's also perfect information about your product, about the competitor's product. People will be better and better in finding out, what's the right product for them. And you will not be able to lure people into a product. You will not be able to just convince them of a bad product. So there's more information. And because of there's more information, I think there will be more specialized vertical services. And if you're not really specialized on what you do, I think you will have a problem. So I think it's more like being more and more granular than more and more diverse. Yeah.
So as you find yourself, as you find your focus, as you get closer to the profitable point, you decided to go public. What kind of experience was it for you and your company, other peers?
First of all, it was a very logical step. So if you follow this idea of saying, okay, again, I'm a friend of people being close to themselves, being authentic, understanding, what they can do, what they can't do, and so I'm for companies. And if you follow that idea that you want to be closer and closer to your identity, then I think for us in this situation, it was important to go public. Because basically, to the public markets, to talents, and so on, so it was rather the story of like, okay, there's Expedia, and there's also trivago, and somehow they are connected, and both report the numbers together, but also separately. So it was kind of it was not a really real identity, yeah. And I think for trivago has a very unique story, and we wanted to tell that story. And I tell you right now, it feels way more natural, way more easy to speak about the story of trivago now that we also have an own identity at the stock market. So first of all, that was the reason why we did it, which also comes with, of course, a currency for your talents, which is the same thing, the same idea, one identity, one company, one currency for motivating people. And so that was the reason, and I tell you, it worked out perfectly. So that was really something that for us worked out perfectly. I think people are even more united around the company. We were able to get even more people, have even more people as shareholders of the company, more employees shareholder of the company. They are more sure about the value that they create. So I think that's went pretty well. I think the process itself, you don't really want to go through that. I mean, you don't do an IPO for fun.
Here comes the juicy part. So why not? How painful was it for you? What was it?
See, there's, I'm a lot about, so my motivation is a lot about freedom. It's a lot about being able to take my destiny into my own hands. That's why I became an entrepreneur. That's why we run trivago over the years. That's how we run trivago over the years. And there comes a point within an IPO process where the destiny of that process, basically the destiny of your company there, it is not in your hands anymore. And you can be prepared to that, and you can still think, no, I will do it the right way. But somehow you're maneuvered into that situation, and that never feels really good. If you're not in charge anymore, and so that's something I would not like to experience again. Yeah, and but I mean, still, if you would ask me today, would you do it again? Of course, I would do it again, but not because of that experience. There were also positive experiences, around that, but that was definitely a negative one.
Some say that a number of startups or companies are choosing not to go public, but they choose private fundraising. going for venture capital, mutual fund investors. Why go public versus those other options for trivago?
So for us, it was more this kind of separation process, right? So that's a not very uncommon process. So actually, when we did the round with did the deal with Expedia, where Expedia became a major shareholder in the company, I think there were rarely like this huge financing rounds that we see today. And that's why we decided for that and that situation, which was like 4.5 years ago, nearly 5 years ago, we decided to go with Expedia because we decided against an IPO at that stage. So we said like, okay, we're thinking about an IPO. We had around $1 billion valuation at that time. We're thinking about an IPO, and we decided against it and said no, we go for Expedia. And the reason was that we thought it's too early for the company, it's too early for the culture of the company to go public right now. And we thought, why not growing under the umbrella of a larger company, learn how it is to be public, learn how it is to deliver your numbers on a quarterly level, and so on, and then have the opportunity to do a spin-off or an IPO later on. And that was the idea when we did that. So that's why we have been then later on in that situation where basically an IPO was a way to go our own ways again. Generally, when you ask me about other companies, yes, I think a private financing round, I don't know why you really have to do an IPO, besides maybe getting a good currency for your employees. But if you have continuous private rounds, it's still possible. I think the idea, I think what Spotify tries to do now, I'm not sure if they are already successful, but just go public without an IPO, I think that's a very interesting idea. So I would have loved to have that idea myself a couple of months or a year ago. Because I think maybe that's the better process. I don't know.
You mentioned the cultural factor at trivago just now, and this is actually the point that you were making off stage earlier today. What was it about trivago's culture that you thought was changed enough, ready enough to go public?
So I think we have been always a company where we wanted to move as fast as possible and iterate as fast as possible. And iteration also comes with volatility, right? And I think if you want to be fast and innovate fast, volatility is there, and if you have not learned how to handle that volatility, it becomes quite difficult. And we have that. We have this kind of iteration, learning, innovation, and so on, continuous innovation. And we never really cared so much about, so we don't have budgets, so we have only business models and we follow. So we're not so much about planning, but about acting and so on. So the problem is, if you do that on a smaller scale, it's just more volatile than you do it on a larger scale. Mm-hmm. So when we like 4 years ago, I mean, the revenue was, I don't know, when we did the deal with Expedia, the revenue was about 100 million, and now we are like nearly tens of that, like for the last 12 months, so times 10. And then you have like just less fluctuation because you have more markets, you can more balance things out, and so we can have the same rapid innovation and development, but just because we do it on a larger scale, it's just not fluctuating so much anymore.
Looking back at December 2016 IPO and looking at the market conditions today, would you make the same decision of going public at that point with a NASDAQ listing in the US if you were to go public, say, this morning?
First of all, same point in time, yes. Why? Because this was, I think, the fastest IPO that have ever been done of international company at NASDAQ. So we really started with the IPO, I think, in July or in August, and we went public in December, beginning of December. So knowing that we had to change our accounting structures to go from HGB to US GAAP, which So this was already like a huge thing for us, and then going public there with also lots of governance issues with our mother. So all of this was a hard process for us. We wanted to do it fast, and that's why I'm super happy that we did it last year and we didn't wait for March or whatever. Because basically, it's always slowing down your business, right? When you're going into that process, it always consumes brain time. And I'm so happy that, like, beginning of January, I was able to start and focus all my brain time back to product and back to creating user value and creating a lively and liquid organization. So that's a way better focus than focusing on the IPO. So that's why, timing-wise, I'm super happy. If you could have done even more early, it would have even better.
I was going to ask because I wonder, I'm sure day one of IPO, you are giving a whole bunch of interviews, very busy, crazy day. From day 2 till now, did you ever find yourself looking at the stock chart or everyday market reaction and maybe in meeting rooms or secretly to yourself thinking that, or limiting yourself to some degree, or making a little slightly different decisions?
Not until today.
Okay.
I hope I can maintain that for the future, but definitely not until today. So I would not have taken any decision differently for the last half year. I think it's always up to you, right? I mean, if you can basically, make yourself independent from what happens on the stock market and really say, hey, we're doing our things, we're doing a long-term investments. We lately did a lot of decisions where we said, okay, we rather invest in the long term, and I'm super happy about that. I mean, we could have taken way more short-term oriented decisions, and we're not doing that, and that makes me proud. So proud regarding the whole organization, not myself, but the whole organization that still is possible. I think that's great. And so, no. That was our communication. Maybe that was also the reason why in the beginning the stock price was maybe like not as high as we wanted it to be, because basically we told people, hey, expect from us that we will not change. Expect from us that we will going for long-term value creation, that we will not look at the stock price. Please do not expect from us that we will just always fulfill your expectation. Yeah, we will fulfill at the end. We will hopefully fulfill the user's expectation. We will create the best user experience, and we could create the most user value, and then hopefully commercialization will follow that. But that's what we're going for, and not for the stock price. And maybe now people understand that this can still work. That you can go for long-term user value and still deliver results. I mean, that's what we did in the past for the last 5 years or so, or 10 years. And maybe that's why they're buying into that right now. But no, I mean, that's true for the future too. So we will definitely always rather decide for long-term value creation against short-term.
As the co-founder and CEO of a now public company, looking at some recent news headlines, there's a story of Facebook, its recent share split in terms of with the leadership seeking more control of the company down the road. Is that something, has that kind of story become more relatable or understandable for you?
I can totally understand that. So I can totally understand that that you do not want a company be run by investors purely. No, I think as long as you are the CEO and you can basically be the buffer in between, I think it's okay. But if you have like a long-term idea of your company, and then you're giving over power to just to investors who are never as long-term oriented as you, I think that can destroy value. Yeah, sounds weird, but I think it can. And that's why I'm super happy that we are still in with like more than 30%. So the founders own more than 30% of the company. Expedia is basically controlled by one entrepreneur who shares our beliefs and who's very close to us. So we are I think we are very, very happy about the structure that we have right now.
I ask you these questions because I feel like there's perceptions around, there's this allure of going public, but in reality it's something that, as you point out, that's something that you never want to deal with ever again. There is this idea of activist investors, hedge funds making more noise recently. The market environment has certainly changed. Is trivago ready for that, or did you ever discuss that with your management?
What I learned during the IPO process, basically, because I'm not, I was focusing a lot on the business. I'm not like dealing with the stock markets on a day-to-day level. And what I had to learn basically is that first of all, there's very different hedge funds. So I think people speak about hedge funds, and then they think they have an idea, but basically the umbrella of hedge funds, there's so many different ones underneath there. Yes. And so yes, there might be ones which manipulate the market, which shorten stocks and so on, and which cause a lot of volatility and friction. I think that's something you have to deal with.
Okay.
I think we have seen this a couple of times actually, where basically they try to push the stock price. So there was one approach where they try to push the stock price underneath the first pricing, to think like, okay, then it will plummet. There was probably one approach when the half-year holding period was running out. So you see that. You see that. You have to cope with it. I think at the end, it's very short term. There is no chance that this is something that is there for the long term. So you will see that, and if you just continue to deliver value, people will always look at the stock price, and it will basically end up where it was before. So I think that is one thing. But they are also like really good hedge funds. We met so many amazingly smart people. So when we have been on the roadshow, and I spoke about what's a good experience, we met so many amazingly smart people, and it was an amazing experience. You get into a room, you never met these people before, right? You're sitting there like, I don't know, close to Central Park, New York, amazing view, super impressive, and so on. You walk into that room, and then you're meeting people, and they say, yeah. We're looking at you for the last 6 years. You did this, you did that. They were knowing the history of my company way better than myself. They were pulling out numbers from 5 years ago. It was incredible. Yeah, it was incredible. Like how much deep thinking they did about the business model. They really explained it rather to us than we explained it to them. So, and I think the experience of exchanging really smart people about your business model, I think that also evolves your model itself. So when you're speaking with smart people about what you do, you always get into new ideas, you get new impulses and so on. So I think that was for the management, was a really good learning experience to speak to those people. And I really like to have them as investors, because they know, I like rather to have smart and informed investors, because they take smart and informed decisions over time. And that's why I love them to have them also investors into the business, those people. And generally, coming back to the question, because you asked Nasdaq or maybe like
yes.
DAX, or German stock exchange. First of all, for us, it was important to be among our peer. And basically, our peer is on Nasdaq. So all these C-Trips and Expedias and Booking or Pricelines of this world, they're all listed there. So I think that's our peer, and I think it's important to be among your peer. That's one thing. And the other thing is, coming back to what I said before, so when you're going to other capital markets outside of the US, especially when you're going to Germany or Europe or so, you just do not have that specialization of investors. So investors are just not so close to your model. Mm-hmm. So you start rather getting into a selling mode than into a discussion mode. And that's very different. And that's, for me, it's not so much value creating. So for me, it's not value creating to sell my business. For me, it's value creating to discuss about my business, to understand my business better. So, and we wanted always to say, no, we rather want to go where people understand our model, where we cannot fool them, but and they be very honest with us in both directions. And that's why we decided for that. And I think that's still a very good experience, so we're happy to do that.
Apart from trivago and broadening our scope a little bit, do you think the window is still open for the rest of the year for more tech or trivago-like IPOs this year, such as? What's the buzz that you're hearing?
I mean, I'm not so much around. So I'm happy that I have a really great CFO who does most of the investor communications today. So I'm not so much an investor myself, so I'm probably not the most knowledgeable person to answer that.
Any company that you'd be excited to see go public?
So just from a European perspective, I think Spotify would be super interesting to see them going public and raising the profile of European companies. We've seen basically last week or 2 weeks ago, we've seen Delivery Hero going public, also with a 5 billion valuation, which is again raising the profile of European companies. There are companies I'm also invested in, like HelloFresh, for example, who people speak about going public one day this year maybe. So there is, I really like, I'm from Europe, there's not so many tech stories from Europe. I really love to see those companies being successful, sharpening the profile of European tech companies, because I think in Europe there's also a lot of potential, which is currently, like in Asia, which is currently not visible enough.
Right.
And I think that especially like all the regions outside the US, that we will see them flourishing over the years, that it will not be that concentrated on the US.
What would be the last word of advice that you would like to give to all these participants at Rise or startup people who are thinking about going public? What would you say? Don't do it?
No. Do it, but never stop thinking yourself. So you never trust, these people, they tell you, we have done this 1,000 times, right? So we know how to do it. We always did it this way. This is the only way how it works. No, don't stop. Do not stop thinking yourself. Do not stop making up your mind if that makes sense or not. If you just think about like common sense, then it's enough already. So if you, for example, just one thing, I mean, if you're thinking about, so why is the average jump of the stock price of a US tech IPO, larger US tech IPO of the last 5 years, why is the average jump 40%? When you actually pay banks for come up with a perfect price for you, wouldn't you not say they're doing a bad job if the average jump on the first day is 40%? I ask myself, why are not more people asking this question? Nobody is asking this question, so maybe that's a good question to start with.
Okay. Well, it's a wrap for this particular fireside chat, but I'm sure the conversation about startups and their IPO plans and ambitions will continue. Rolf, thank you so much for joining me today, and thank you so much for joining and listening into our conversation.
Thank you.
Thank you.